It's time to take care of business on Kern Radio Newstalk 1180. Once again, here are your hosts, Marty Pay and Clay Kerner.
Hit the road, Jack. Don't you come back no more, no more, no more, no more. Hit the road, Jack. And don't you come back no more.
Love me a little Ray Charles.
What you say? Hit the road, Jack. And don't you come back no more.
That's the theme for the presidential election next year.
Ah, yes. You are back on Taking Care of Business on Kern Radio Newstalk 1180. Our phone number, if you'd like to call, is 842-KERN. That's 842-5376. Our guest by phone is Tobin Smith from Bulls and Bears. Tobin, I caught something on your Facebook page this morning that I didn't realize. You grew up in the San Gabriel Valley.
I'm a California kid, man. I must say that it's a little strange when I go back to California, which I will all the time, like next week, for instance, and see Jerry Brown as governor. It's like it's deja vu and not in a good way.
Oh, you bet.
We love Moonbeam.
Yeah, good old Moonbeam. Yeah. So you remember old Tui's down in San Gabriel, huh?
Yeah, well, it's actually in San Marino. That was right on the corner of Huntington Drive and
Huntington, Garfield, and Atlantic.
Yeah, exactly, Atlantic, and I mean that place is my father grew up in South Pasadena, and his family's all that area, and going to Tui's, man, that was a big deal. Yeah. They had the drive-in and the women on the skates at one time.
Yep. Well, the only reason I mention that is, and then we'll get off of this topic because there are a lot of people that aren't from that area, it probably doesn't mean anything, but there used to be a little chicken restaurant next door in the late 60s, and I was part owner of that. I was a manager of that place.
Really?
Yeah, it was a long, long time ago, many moons ago.
Many moon ago. Well,
yes,
it's a little different area these days, but
definitely.
The theme of opening a business and running a business in California, just reminds me that the green energy topic was another issue that Jerry Brown came out and said they're going to have 500,000 green energy jobs. And listen, I've written books on green energy. Our whole research business that's a big area where we follow. But holy mackerel, you can't. If you look at the quote-unquote making jobs, the area that we focus in is on China, because in China, for a variety of reasons, it's incredibly well supported. There are, guaranteed purchase agreements. Wind is actually a better product than solar. But if you look at Europe, which is probably the analog to the United States, it's cost them $790,000 a job for quote-unquote green jobs. Well, California, I don't think they write that check. In Texas, they say big hat, no cattle. I don't know what it's going to take to get California around. I know that you passed that law that will now you can have a 51% vote right on the budgets. But I miss the days when California was logically run and was not broke. I pray that when the unions and the default comes, which is going to come, that they pull their hat out, because it's a great state, but physically out to lunch.
Yep.
We're not sure what's going to happen in California with our wonderful Jerry Brown, although he did put out about $6 billion in cuts. He's got projected, came in the paper today. He's also going to cut $6 million from his own office staff, which I found interesting.
Well, he is a realist, and God knows he's a survivor. I sort of missed, Linda Ronstadt and the Stone Ponies.
But, yes.
Well, at 72, he really has no one he has to worry about owing anything to.
Right, exactly. There's no legacy. So, well, he's probably lived. He's like 105, by the way.
Yeah.
The last time I saw the guy, I could not believe he was 72 years old. He's done that quite well. Whatever, usually you say if somebody tells you that they remember the 60s, well, they didn't live in the 60s, but he did, and he seemed to be better for it.
Yeah, definitely. I had a question for you about Bernanke's little talk yesterday. What do you think about that little talk?
Well, in the old days, when I first started off like as an analyst, what I used to do is I used to figure out what the implicit Federal Reserve rate was, because they never communicated. In the old days, you had to look at what they were buying and selling in the overnight market, the repo market, and then you could sort of figure out what their monetary policy was, right? So we've gone from then, which was say nothing, to Open Ben, who talks every week, and it's a it now is a point where he's got to lay the groundwork to end this, quantitative easing. He's got to start to lay that ground, and so he's building the case for that. And part of building the case is saying is that the physical trajectory we are on is unsustainable. But that's sort of the job boning part of it. They obviously aren't involved in the in writing the rules and borrowing the money. But he is he's going to make his case now that when they end quantitative easing, that part of that's going to be so that you don't get a free lunch. The interest payments for the federal government this year is lower this year after borrowing another $1.7 trillion than it was the year before, and it's lower than it was the year before. Why? Because we have this short-term Treasury rate that is so incredibly cheap and so low. So when that comes back to reality, and the reality would be somewhere on a 10-year bond in the 3.5% to 4% range. That is going to, add a huge amount of interest cost, obviously, and he's trying to prep the water to the fact that they can't do it with $14 trillion moving to $21 trillion of interest.
Well, how do you
of debt.
How do you see inflation impacting any of this?
Well, here's the interesting thing about inflation. We get this all the time on Fox Business Network, where the guy comes on and says, "Oh my God, we're printing money and that's creating inflation. So I'm buying gold and platinum and so on and so forth." You have to separate, in economics, as a recovering economist, you have to separate systemic inflation, which is broadly based price inflation, which we do not have, with price inflation. It's coming from commodities. Yes, when the dollar goes down in value, commodities that settle in dollars go up higher in price. But to say that's inflation when we have a 79% utilization of our factory capacity, when we have no pricing power in labor, and when we actually have labor costs down year over year, when the unit labor costs are flat and going nowhere, we still have more of a risk of deflation than we do of inflation, which is system-wide cost. And so then, Bernanke came out on 60 Minutes and other places, and rightfully so, said, we're not printing money. These people really have this idea that there's trucks pulling out of the Treasury Department every day with, stacks of $100 bills. What they do is they buy for their account for the Federal Reserve. They buy Treasury bills, Treasury notes from banks. What's happened is, and that's how they're quote unquote printing money. What's happened is those banks, it has to have a transmission vehicle. And in economics, we look at the transmission of monetary and fiscal policy into the economy, and that is not getting transmitted. It's staying in the money that's quote unquote printed in those banks goes right back in the Federal Reserve to earn all 25 basis points of yield. So when we start to see that cash be transmitted into the economy, guys, then let's talk about too many dollars chasing too few goods, which is what inflation is.
Exactly.
Well, we're not close to that yet.
Mm-hmm. We're having a conversation with Tobin Smith on Taking Care of Business on Kern Radio Newstalk 1180. So Bernanke was talking about the deficit and a deficit crisis, but he had no answers. Where was he going with that talk? I was listening to it, and I'm thinking,
well, remember, that's not his job. He'll when he does his Humphrey Hawkins twice-a-year testimony. The bigger issue, I think, is should the Fed have a dual agenda? Remember, for years it was just about monetary stability. It had nothing to do with jobs creation, or in other words, the amount of unemployment in the economy. And then the Humphrey Hawkins bill sort of changed that in the 60s, and they gave him two agendas, which is stable monetary base, and unemployment rates. Well, to me, that's always been an insane concept. You can sometimes manage both if you're lucky, but just by definition, stable monetary base, many times you have to make hard decisions. You have to raise rates. If you're going to raise rates to support the dollar, well, that's going to raise the value of the dollar, which is also going to make exports less competitive, which is a job impact. And conversely, when you're in a post essentially depression era, because let's not kid ourselves, we've gone through what's the equivalent of a modern day financial depression. Mm-hmm. they proved in China, they proved in Japan, you can put rates down to zero for 20 years and not have the economy go if you don't, take care of other things in the business. So he's really saying, guys, I'm going to, try to make as good a case I can for why people want to buy dollars. But if you continue to borrow at these rates, one day, everybody fears that one bond auction where they don't sell, the $56 or $85 billion of bonds they need to that day, and then the thing starts to come unglued.
Toby, you mentioned the jobless rate earlier, and
Sure.
I read yesterday that it's down 0.4%. That's so exciting. It's really an accomplishment.
Well, remember, those were just because 600,000 people decided not to pursue work. There's two surveys, obviously. There is the corporate survey, which actually counts hires and fires at 50,000, actually more than that, corporations all through the United States. And then there's the household survey. And the household survey is a phone call to 50,000 households saying, how many people are in a household, how many people are seeking work, and how many people are working. And the household survey, by the way, counts if at my company, we have a lot of people who work for us who are, what I would call independent contractors. We hire them to do specific stuff for us. We pay them a fee, and in the investment banking side of our business, we pay them a fee if we are successful in an engagement. Well, those people, according to the corporate survey, aren't working. They're quote unquote consultants. They don't have a job, and that's malarkey. They do have a job. In the household survey, they do count people who do not draw a paycheck but are self-employed as employed, and so we're actually seeing stronger growth as you normally do at the bottom of a economic cycle in the household survey than the corporate survey. So I highly encourage you guys to look at both because it really does tell a different story. At the height of an economy, when you're at the not the trough but you're at the peak, the household survey will look like we have more jobs than you have, and that's what we had in 2007. That's what we had in 99. So you really have to start looking at corporate. But at this point of the cycle, household survey, from our perspective, is a more accurate way of seeing it. And yes, we're not creating as many jobs, but let's not kid ourselves either. There was 4.5 million jobs created in the 2002 to 2007 that should have never been jobs because they were based on building houses we didn't need, mortgages that we didn't need, other construction that we're now vastly oversupplied with. We've got a 17% rate of vacancy in commercial buildings in the United States. Those jobs are not coming back. And so the idea that we could operate our economy at a 3.5% unemployment rate, which is what it really was, not going to happen again in our lifetimes, and I plan on living a long time.
Definitely. Let's pick it up there in a minute. We're talking to Tobin Smith on Taking Care of Business on Kern Radio Newstalk 1180.